Hello and welcome to PQ Prime. I'm Hiral Daria. Overall, if you see in terms of where markets are concerned, the pressure does continue. In fact, we are trading somewhere in that range of 19,300. We went below the 19,300 mark already, and almost a 275 points cut coming in terms of Bank Nifty as well. The advanced decline ratio absolutely skewed towards the declines. Joining us on the show to discuss individual stock specific action is Sunny Agarwal from SBI Securities. Sunny, good morning and welcome to the show.
Good morning, Hiral. Thanks for having me on the show.
Always a pleasure to speak to you. Sunny, let's start with ONGC. That's one of the top gainers on Nifty 50. The company reported numbers as well, a good set of numbers from a profitability and operational perspective. What's your view?
So definitely, if you see for ONGC, the average crude realization for the quarter was $76.5 per barrel. And what we have seen is that of late the crude prices are currently trading in the range of $82 to $85 per barrel. However, one thing was negative for the ONGC this quarter, that the production volume has dropped due to the shutdown of Panna Mukta offshore platform. And at the same time, there was a cyclone on eastern coast that has impacted the volume to some extent. But looking at the current buoyant crude oil prices, we are positive on ONGC. One has to keep in mind it's a proxy play on crude oil price. So as the crude oil price start to move up, definitely ONGC will also react positively to that. It's a direct one-on-one correlation with the crude oil prices.
Right. Start with regards to ONGC. Now you have a ITC that will be reporting numbers in today's session. It's going to be interesting to see how ITC moves as well, because clearly a strong performance that we've seen from the stock as well this year, 34 to 35% is the kind of up move that has come in. What's your view on an ITC?
So ITC is going to declare the results today for the June quarter. And one of the key monitorable for me in the upcoming results will be what is the volume growth in cigarette and FMCG business, tobacco business, and what are the margin trajectory in FMCG business given the high inflationary environment and the weak rural demand. Hotel business already they have declared the demerger of the same, and the value is going to unlock for the next 6 to 9 months. So we are positive on ITC per se from a medium to long term perspective. Let's see what the numbers talk today. But the stock has recently corrected also from its recent high. And if somebody is a medium to long term investor, definitely ITC should be part of their FMCG portfolio.
Right. Moving on, NCC reported numbers. The profits have jumped 34%, and this is mainly on the back of a good execution profile. However, the stock has been trading under pressure. What would you advise investors to do with NCC?
Yeah, NCC again one of the quality construction player, market cap of 9,500 crore. The result delivery was fantastic for the first quarter. Sales PAT up by 29-35% at around 3,900 crore, 162 crore. Company has reported highest ever turnover in the first quarter. Order inflow was robust at 8,000 crore. Total order book stands at 54,000 crore. Trading at less than 12 price to earning multiple. So it's a no-brainer. Definitely one of the top picks in the construction play. I feel the stock has got a significant headroom in terms of stock price appreciation. So I won't be surprised in next 6 to 12 months we may see price hovering near the range of 200 rupees.
Right. Moving on, Sani, another stock that I would want to discuss with you is with regards to ABB. How are you looking at ABB taking into consideration, in spite of a good show, the stock has been trading under pressure?
So ABB again one of the top-notch MNC in the cap goods sector. But one has to keep in mind that despite of robust performance, the stock is under pressure due to the relatively higher valuation. So I was just looking at the numbers. Annual run rate, profit run rate of the company is around 1,200 crore, and the current market cap is around 90,000 crore. So trading at more than 80 price to earning multiple. So despite of a good show by ABB, we are seeing stock under pressure. So my suggestion to the investor will be that this is a stock which one can add on deep. So maybe a 10-15% further correction from the current level will offer a better margin of safety for the investor in medium to long term.
Right, so that's with regards to ABB. Patanjali reported a weak set of numbers. How are you looking at a Patanjali and what would you advise investors to do?
Yeah, for Patanjali, one has to dissect the company into two parts. So there are two businesses in Patanjali. One is edible oil business, which is a kind of commodity business. So that business is under pressure for the entire industry. So what we have seen is that the edible oil prices have corrected significantly, and all these edible oil manufacturer were stuck with a high cost inventory, and that is the reason that piece of business has reported losses. On the other hand, the food and FMCG business is doing well for the company right now, contributing nearly 24-25% of the total business, and that business continue to do well. So kind of mixed set of numbers. Patanjali, edible oil under pressure, food and FMCG doing well. Again, the way company has went on record to say that in next 4 to 5 years they aim to be 50,000 crore top line company. So in long term, definitely outlook is pretty optimistic. Short term outlook is clouded. So again, it's a kind of buy on deep story for me as far as Patanjali is concerned.
Right, so that's with regards to Patanjali. Now, moving on, another company that reported numbers is Sri Renuka. The losses have widened. And if you see, I was looking at, even the Bajaj Hindustan or a Balrampur Chini, how is the trend looking like for you for the sugar pack, taking into consideration how the prices are moving right now, as well as the export ban that continues? What would you advise investors to do?
So if one look at the sugar sector, one has to keep in mind that sugar, all the sugar companies is directly, indirectly play on ethanol story. So one has to keep in mind that with the election ahead in the next 6 to 12 months, government won't allow any inflationary measures as far as sugar prices are concerned. And if you look at the demand supply environment for sugar also, and with keeping in mind export ban, I don't think so there is much significant upside as far as sugar division is concerned. The only profitable division for all the sugar companies will be ethanol, and that story continue to look good. So if somebody is a long-term investor, definitely he can ride on any sugar company which have recently added the ethanol capacity, and Renuka is one of them. So again, Renuka is kind of a turnaround story as far as ethanol or sugar story is concerned. If somebody is looking for a safer bet, then one can look at Balrampur Chini and Triveni as well.
Right, so pure play in terms of ethanol is what you should be watching out for. Moving on, Voltas reported nearly a 19% rise in first quarter profits. And what they said is that the performance has mainly been boosted by air coolers and air conditioners this time around. What would you advise investors to do with the Voltas?
Voltas again belongs to the house of Tata, a good business in temporary trouble. So the entire sector is going through trouble because of these pressure margins under pressure. And at the same time, due to the unseasonal rain, definitely the demand has also shifted to some other quarter. So what I would suggest is somebody would like to ride this story on increasing penetration of air conditioners in India. One can gradually accumulate Voltas. So downside is limited. I feel 800 is a base price below which the valuations anyway continues to remain attractive. But one need to be a little bit patient in terms of creating returns out of the Voltas. So what I would suggest over the next 3 to 6 months, one can gradually accumulate Voltas between 800 850 band, and then just remain invested for next 12 months to get a return of 15 to 20% from Voltas.
Right. Moving on, your SJVN, in fact, the pipeline in terms of orders is really strong. Now, Arunachal Pradesh has also assigned SJVN 5 hydro projects, to the company. And the reason what they've said is that the private developers have failed to execute the work, and hence they've given it to SJVN, which clearly indicates the kind of executionable strength that SJVN probably has. How are you looking at a SJVN? Do you think it's still a good level to enter, taking into consideration the kind of up move that we've seen on the stock already?
It was a pleasant surprise a few months back, wherein SJVN has reiterated the fact that they are going to increase their capacity by leaps and bounds over the next decade. Of late, the stock has rallied significantly. So what I would suggest is that if somebody is a long-term investor, buy on dip should be the strategy on SJVN. But one thing is for sure, if SJVN is able to deliver on the capacity addition front, which is little bit tough for any hydro player to deliver since the gestation period or execution period is slightly longer in hydro projects. But if a company is able to deliver, the stock has miles to go from here. So buy on dip is again a strategy one should deploy in exchange.
Right. Moving on, CRM Mills is looking to award shareholders, and they've said they will be buying back around 16.61 lakh equity shares, and this will be done through the tender offer route. Now, the consideration is around 108 odd crores, and the price is at around 650 rupees per share. Currently, the stock is trading at levels of 525. What would you advise investors, to do? Actually participate in the buyback or not?
Yeah, definitely one should take the advantage of the buyback and one should tender the shares, obviously, since the arbitrage opportunity is still available. But one has to keep in mind that buying the fresh share from the market and then tendering in the buyback is not an advisable strategy. If somebody is already holding the CRM milk share, one can tender in the buyback and try to encash on this opportunity. And once you are out of the CRM, there are many other better companies like Arvind Mills where the business growth outlook prospects are better. So one can shift from CRM to Arvind Mills in case your shares are getting tendered and you are in the receipt of cash.
Right. So that's with regards to a CRM Mills buyback. Thank you so much, Sunny, for joining us on the show and sharing the views. So those are the movers and shakers in trade today, but clearly ONGC continues to be the top gainer, followed by HUL, Dr. Reddy's, Kotak, and Sun Pharma. Whereas on the losing end, you have Adani Enterprises, JSW Steel, Adani Ports, Hindalco, as well as Tata Steel. So clearly the metal counters have been trading weak in today's session. So that could be one of the top losing sectors as we speak. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to PQ Prime.